Okay, and this is a really good page to always come back to. Again, I mentioned in the beginning, the nature of learning unit 4 and 5 and even going into 6 is that it asks quite a lot of you. And a lot of the times we get confused in terms of where you are in the process. What are you actually trying to do? So creating steps is quite a nice process for you to follow and say, okay, every single time I have a transaction, I'm actually following these 11 steps. Now, in time, you can obviously compress them a bit as you move through the work quicker. But especially if you are struggling at all, I've always advised for students then to take it really slow for the first couple of transactions until you become comfortable with this process, but literally take it step by step. It might take you a half an hour transaction, but you are actually working quite effectively on your understanding of journalizing transactions. And that's the only way you can do it. And that's the only way you can actually in the future work quicker is if you understand all of these steps. Okay, so step number 1. So this is when you have a transaction, by the way. So you get a transaction. Let's say you have got the owner contributing 50,000 Rand to his business. Okay, I'm just going to refer back to that. So firstly, identify the kind of journal. Okay, you can use the textbook, you can use my previous slide. I typically always ask, is there cash involved? And you would say yes. Cash increasing, yes. So you would be working with a CBR. Okay, decide which accounts or columns in the journal is affected. So we know bank is affected, and then the question is always what else. So what is the owner giving, or how are we getting money, or why are we getting money? And it's because of the owner. So because of that, you would be then leading over to using capital, and capital is typically sitting in the sundries. If you are receiving money for selling inventory, for example, you'd be sitting with a bank column, like we always do in the CBR. Why are you getting money? That's the good question you can ask yourself next. The reason that you're getting money is because of a sale. So then you would be using the sales column. Okay, then make sure, third step, you start your main column, which is the first column of any journal, with a VAT inclusive amount, because the money we receive, the money we pay, the money we owe, always owe to us. I recap this in Learning Unit 3, is always VAT included. Remember, you might remember I said, if you are receiving money, some of that, which leads you to you receiving more than you keep, some of that you are giving to SARS. So whatever's floating around in your main column in any journal is always going to be VAT inclusive. Okay, so VAT is on top of that amount. You are receiving, paying, you are owed, you owe an amount with VAT in. Okay, so that's the amount you're going to put into your main column. So step 4 then is you take off the VAT after you've journalized in column number 1 and number 3. That's step 3, sorry. After that, you take off the VAT by multiplying with 15 over 115. You put the VAT in the VAT column. So that calculation over here will give you the VAT amount. You put the VAT in the VAT column and the rest, and with the rest, I mean 100% in whatever column you chose, actually back at number 2. So in our case, the capital contribution of the owner and cash didn't have VAT, but in the case of selling inventory, you've got an amount in bank, which is 115%. You take the VAT off, put that in the VAT column, and the rest, the 100% goes to sales. Okay, you do step 1 to 4 for all transactions. So you decide on the journal, and mainly you work with one journal per transaction. You decide on the journal, decide on the details of the transaction. So yes, I'm receiving money, what for? Yes, I'm paying money, what for? Why does someone owe me money? Why do I owe someone money? The why, how questions are actually quite helpful for you to start unpacking this transaction correctly. And then after you've decided which columns are relevant, you put your VAT inclusive amount in the main column. If your transaction has VAT, take off the VAT then for the VAT column, and the 100% goes into whatever other column you've chosen to use. Okay, and that's your journaling process. Then when you are done with all your transactions, very important step number 6, you total all your journal columns so that you can get a one number summary of the total amount that each column in each journal increase, decrease, decreased with, whatever your reasoning. So, I mean, I mentioned earlier, if you have 5 transactions in a journal, let's say 5 transactions in bank, totaling the columns gives you an indication of what is the total amount that bank increased with. And that's what you need for your T accounts. Okay, so number 6 is very important. Easy marks if you're doing it in an assessment. Total all the journal columns when you're finished journalizing the transaction. Okay, number 7, bit of a side note. The main column in any journal should always match, as in be equal to all the other columns. And then cost of sales is an exception here. It stands separately. It's not actually part of any journal. Okay, it's just kind of a stock tracking column on the side. So your main column is always equal to the combination of all the other columns. And this is because of your debit credit principle. You didn't see it in the journal. We don't specifically mention debits and credits when we journal, but they are actually still very much running in the background. So your main column matches with all your other columns. Okay, your debit equals your credit, or your credit equals your debit. Then, that's just a little side note. Okay, then step number 8, each column gets posted, which means transferred, to a specific T account. Okay, a general ledger account. How do you know which T account? The name of the column is the name of the T account. Okay, so I always tell the students, go back from your total column total in your journal, go and read the name at the top. Okay, that's the T account that you're going to transfer the amount to. Okay, number 9, entries from all journals, so all 8 journals, however many ever you've done, go to the same T account. So that, what I mean by that might seem a bit confusing, is if you've opened a sales T account, you only have one sales T account. If you used sales in more than one journal, you'll post all the journal sales entries to one sales T account. And you'll see this the very first time that your lecturer illustrated the bank T account. You've got bank entries from the CBP and the CBR. It doesn't go to different bank T accounts. You have one bank T account, and whatever journal you've used bank in goes to the same T account. Okay, and then step number 10, when you are done with transferring all the journal column totals to the relevant T accounts, you will then go and balance or total the T accounts. And that gives you a final number of what each T account is worth. That final number you transfer to a 1-page document, you list all the T account names and that final number, and that is your trial balance.